Hello everyone, welcome back to Just Invest Today. In today's video, we are talking about the market cycle, the natural element of the market, because we see this market going crazy, going up and down. You see all the bearish news, all the bearish articles. No one wants to invest during these times. Like, everyone hates it. But if you really understand the market, you know this is a natural process of the market, and this is always going to happen. We hear amazing investors always talk about the changes in the market. It goes up and down, and kind of what to do during this market cycle. And actually, you can kind of take advantage of the market cycle if you just understand it. In this video, I'm going to play a couple of clips from Lee Lu, Warren Buffett, and Joel Greenblatt that talk about the market cycle. And the recession worries are at an all-time high. Everyone thinks there's going to be like a next depression level going on soon. People really think there's going to be like a depression right now. You see the market is already down 11% for the past 6 months. It's been down lower than this too, down like 20%. You see the crane shares in China down 26% for the last 6 months. It's down almost 68% or 52% for the past year. But it had a strong comeback for the month, up 32%. So you kind of see the sentiment shifting a little bit. But you see a lot of articles just preaching fear in the market because of the recession worries, about inflation, oil prices, about the war, just a lot of stuff happening in the market. So let's look at this first article. Bank of America, clients hoard cash at the highest level in 2 decades. Bank of America survey shows highest cash levels since 9/11. This is crazy, and this is all because of everything going on in the market, and people are just super bearish. Can you believe that? If that is not super bearish and almost like going to depression levels, what is? Like, people do not want to invest. People are holding their money. They think equity is just going to continue going down and down and down. So it might be true, but who really knows? Look at this post by Charlie. The worst starts to a year for the S&P 500. This year is in the top 10 in the history of the market. 12.8%. 1932 was 45%, which was the highest, which is pretty crazy insane. But 12.8%, it's like top 6, man. That is insane. You have Jamie coming out and saying that brace yourself for an economic hurricane caused by the Fed and the Ukraine war. So the JP Morgan CEO is predicting something really bad to happen in the future as he sees the Fed tightening, he sees the Ukraine war, he sees that they're not buying bonds at the same rate, which is tightening. He sees oil prices going sky high. So he is just preparing his bank and just holding on to more cash, holding on to more reserves. So we see what's happening in the market. Everyone is actually down on the market, preparing for the worst time. So this is what's going on in the market. But we have to look at the other side and know that this is the natural process of the market. And this goes back to the market cycle. Let's hear some of the best investors talk about the market cycle and how to handle it.
Classic Columbia, at least for the last 5-6 years, somebody raises their hand and asks a question that goes something along the lines, something like this. Hey Joel, congratulations, you've been doing this for 35 years. You've had a nice record, but now there are more computers, there's more data, there's more ability to crunch numbers, and kind of isn't the party over for us? Isn't it just more hedge funds? There's just a lot more competition. Isn't the party over for us? So my students are generally second-year MBAs. I'd say average age 27 or so. So I just answer it this way. I tell them, let's go back to when you learn how to read. Let's take a look at the most followed market in the world. That would be the United States. Let's take a look at the most followed stocks within the most followed market in the world. Those would be the S&P 500 stocks. Let's take a look at what's happened since you learned how to read. So I tell them from 1997, when they were 9 or 10, to 2000, the S&P 500 doubled. From 2000 to 2002, it halved. From 2002 to 2007, it doubled. From 2007 to 2009, it halved. And from 2009 to today, it's roughly tripled. Which is my way of telling them that people are still crazy. That was just the last 17 years.
Look at that, all that volatility in the last 17 years. Are you telling me that you can't take advantage of that doubling and halving, doubling, tripling and halving. That's what the market is about. If you can honestly just value companies and stay the course, like this is a beneficial time right now.
And a way of understating the case. Because the S&P 500 is an average of 500 stocks. If you lift up the covers and look underneath what's going on, there's huge dispersion of those 500 stocks between those at any particular time that are in favor and those that are out of favor. And so there's a wild ride going underneath the covers. If you look under the covers, there's a wild ride of those 500 stocks at any particular time. And that doubling and halving with the average of 500.
Small cap stocks have been getting crushed, and this is a perfect example of if you look under the hood. Like a lot of these companies, even all these tech companies are down 80-90%. So even though the S&P is down like 11% or 13% for the year, when you're looking at other companies and other sectors, it's like 80-90%, which is literally insane. So you can look under the hood to find value if you can find the intrinsic value of these different companies.
It's really smoothing the ride. So there should be an opportunity.
There should be an opportunity. This is the perfect example. If you have money on the side, this is the perfect opportunity to take advantage of everything that's going on in the market right now. Let's listen to Lee Lu himself talk about this market cycle.
And even businesses that could really thrive in that environment, in the sense to have a certain characteristic of anti-fragile. And so that up and down becomes somewhat friendly for us in a sense.
The up and down of the market becomes friendly for us. Lee Lu is saying this.
When our favorite companies on sale, discounted by 50, 60, 70%. If we have money, we'll buy more of it. If we don't have money, it is a hallmark of a good investor. You can sit through and watch your portfolio down by 50% and not be affected at all.
You can look at your portfolio be down 50% and not flinch at all. That's the hallmark of a good investor. How many people are down like 30, 40%, man? If you understand the real value of your companies and you're not too worried about it, then yeah. But honestly, some companies are not worth what you paid for. So in that case, you kind of have to be worried. But if you understand the real intrinsic value of your companies and they're down 20, 30%, then you don't have to be too worried, because the hallmark of a great investor is being good at staying calm.
Yeah, other side of the coin is that you're equally unaffected when everybody around you are making fast money, fast and furious, a lot of them. And you're really seemingly totally left behind. And so, and that's really part of the temperament that most of the people don't have. And that's why not everybody can succeed in this game of the investment. And so to succeed in this game requires a certain temperament and a certain understanding of human nature. Also, a certain commonsensical approach, and knowing that your investment return eventually will mirror the actual business return by actual businesses. And then we know in real life, in real businesses, don't really change by day, by hour, by week, by months. It took years for them to really either go up or down.
So that's it for Lee Lu. He's telling you just how it is and how businesses don't really change that much. So the most important thing is just having that philosophy in your mind to stay calm, collective during these ups and downs of the market cycle, which is happening right now.
Those things, the same thing happened. I mean, in 1964, the Dow closed at 864. At the end of 1981, 17 years later, it closed at 865. It moved 1 point in 17 years. Now, that's not a big move. And that, you can't believe how discouraged people were during that period. But, people were living better. So things can go on a long time that don't make sense. But they do come to an end. I mean, the internet thing. I mean, you had these companies selling for many billions of dollars that had practically no prospects of making any money. That's a bubble.
Which tech company was affected severely by this huge downturn? Like, what company can you see that's never going to return back to what it is? And that's part of the game, man. But that's why we buy companies with strong moats to kind of handle this problem. Buying wonderful companies, because Warren Buffett always says time is the friend of a wonderful company.
But Herb Stein one time said, anything that can't go on forever will end. That's a pretty, but think about that. And particularly think about it next time you're trying to do something just because the stock's gone up a whole lot, and your neighbors make money or something. You've got to be, you just have to sit and think objectively and think about, will I buy this whole business? It's an internet company's got 100 million shares out and selling 100, that's $10 billion. Is it worth $10 billion? If it's worth $10 billion, it's got to be able to give you, 700 or 800 million next year. And if it doesn't give you 700 or 800 million next year, it has to give you maybe 10% more than that the year after and continue to.
Quick way for finding intrinsic value and seeing what are these businesses actually worth that had this huge downward trend. When you've seen the S&P 500 go down so much, it has to be amazing businesses with good value.
There are a lot of businesses that can do that. And people just go crazy. And of course, it's fun. I mean, it's like that sign they put in brokerage offices that says, avoid hangovers, stay drunk. I mean, it's just so much fun to keep playing. But you got to do sensible things to get good results. Yeah.
So that's it for the video, guys. Tell me what you think about the market cycle and how there's going to be time periods where you can take advantage of it when the market is down and it's down and out, people are bearish. Then there's going to be upward trends where you probably can't find companies to buy, but that's when you can kind of exit out and your company's probably reached intrinsic value at that time, so you can probably sell out a little bit to make that huge profit or that profit, and then kind of wait for a next downturn or wait for until you can find another company to buy. So guys, this is the market cycle. Like this video and subscribe to my channel. Peace.